Hi, welcome to my channel. Today, 15th of August, I would like to continue to do the findWHERE series on real estate. Let me begin. Welcome to my channel. Today, 15th of August 2021, I'm still in the quarantine hotel, so this is an effort just to complete the whole series of 21 videos I'm recording for this findWHERE series. Today's topic is Banker, Property Investing and Selling Issues. I'm Thomasin PA 2066. Actually today I'm not wearing spectacle, so hopefully I can do this as well as the previous videos. Let me start. So we have gone through shelter, the whole block on slides on shelter. Now we move to the second block, which is care. So I have spoken about agents in length yesterday. Today, this morning, I am doing the topic called banker. So we deal with the bankers for the mortgage and also for those commercial properties and other types of loans. We still get through with the bankers. Of course, the one that specializes in housing loans, the one that usually would be those officers in the bank that assist us for loan on housing loan. After this part, I will do a little bit of information sharing on valuer and property managers before we move to the next block, which is on investment and investing. This part is more of a macro and micro with the understanding of government policy, portfolio management, how to manage tenant, and also as a landlord, what are the laws that you are supposed to be familiar, not simply lock up your tenant or kill your tenant. And eventually the last part of the block will be the business block. So this part is on more applicable ways of IT tools for use in real estate business. I'll also touch on a bit on foreigners. Foreigners, because now we have a new revamped MM2H policy. So that part we will go in. So this morning's session is on mortgage bankers. So mortgage is in definition is about using housing loan. So why is it the name mortgage? Because there is the specific term to describe the loan which is tagged to a charge. So there is a title ownership or the deed of assignment that is charging the right to the property for the bank to hold as charge. So, or in more technical term in land law is called lien, L-I-E-N. So upon full completion of this repayment, then the charge is removed. So this is usually, if you go to the lawyer, they will say discharge of charge or the reassignment and receipt and reassignment. So the process also for the bank to release the charge earlier on, which is lodged to the land officer. Of course, these are reasons that you may see the title having the charge written there, typed there as in charging to the bank. So that also means you cannot sell the property. Of course, in the process of selling this property which is under charge, you have to repay all. That means there is a redemption sum which you have to pay off the bank discharge it. Then after that is free of encumbrances, then only you can sell your property. So in where if we don't go and talk about those details with the process of the law, then most of us would say that okay, this house is still under repayment, still the loan is paying, so the seller has to do his work, so make it free of encumbrances before we can buy, right? So that part, of course, the legal part, the law is as such, and the seller, the vendor, has to pay his lawyer all these fees to do the process of discharge. And this, sometimes due to business reason, due payment cannot continue. So that's why the bank will take back lah. So repossess the property, and then when it's such the case, then the bank will put this on auction. So auction to exercise the right of the bank to recover the sum that is in default. The owner or having problem cannot pay up the loan, so therefore the bank steps in, repossess the house, like they repossess the vehicle, then the house is put on auction. So they need the power of the attorney to sell the house. So that part is under auction. So I would say that maybe we just look at the overall picture of what bank regulator is. The bank regulator is actually the Bank Negara Malaysia. It's a monetary and fiscal policy of the country, under the system that the Bank Negara will regulate all the policies and the other banks in the country. So we in real estate, so there are two parts. This one we will touch on in the government policy under investment. So if you have the passion and also the knowledge interest in this area, macroeconomics, you can listen to the future talk that I'm going to give on government policy. So it's a very interesting area. So government role in the economy under the Bank Negara regulatory system to regulate the monetary policy. Monetary policy is more like the liquid money. So that means the money rates, the forex, and also how much float money is circulating in the industry or in the economy. Then this is monetary policy, and then the other one is the fiscal policy. Fiscal policy is more like infrastructure, how the economy going to benefit with the import, export, and then all the part on the hardware. Monetary policy is more like a software. Fiscal policy is more like a hardware. So there are a lot of other like businesses that is running under the import, export, manufacturing, agriculture, and all this. So by having the tax system on the how to do the import, export levy, the types of fiscal policy that means having special incentive or quotas and policies to enhance a certain industry. That one under the tax system is under fiscal policy. So for us in real estate, monetary policy is a lot of time to do with loan. So when you borrow money, is fluid, is about the fluid, the water. The fiscal policy is about infrastructure. So the water, immediate cash, immediate fluid to allow you to buy your real estate property. So that is loan interest control. So when the Bank Negara standardized this new thing in the recent time, a few days ago, they say they're going to introduce the standard best rate, SBR. So this is under the monetary policy under this standard best rate, the overnight policy rate thing. So this part, how to regulate the interest rate in the loans, so that the people are more encouraged to get loans to buy property. So that is under the monetary policy. The other one is under the fiscal policy, for the fact that there is transaction of physical houses, infrastructure, that they collect stamp duty when they make money from real estate, then they will collect real property gains tax. Then plus also the services that goes through all this system, the sales and service tax, SST. So all the rental income and all those money that come from the generation of these real estate businesses is all under the tax policy. So when you make money out of the rental income get tax, then this tax goes back to the government into the fiscal policy part of the system. So monetary policy part is more like loan interest rate, so that the cost of fund, when you borrow money from the bank to do business, the cost of fund side is controlled by this monetary policy of the Bank Negara. So this is general information. Now we go to the Bank Negara on the monetary policy side. When they control the rates, the interest rates, they will control through all the system of banking bodies, banking institutions, financial institutions in the country. So there are three group of financial institution. One is the commercial bank, merchant bank, we usually call it merchant bank. Then the next is the Islamic banks. The third one is the development banks. So I give example here. A commercial bank, very simple, everybody know about it. Islamic banks, most of the commercial bank also have the Islamic bank arm. Development bank is a bit different. Development bank has got a specific objective to help certain parts of the business or economy. So for example here is banks in Pandan National to help smallholders, small businesses, and then the agro banks to help all the businesses in the agriculture industry. So agro bank, they particularly look into smallholders, crop planters, so they can loan money for development of the plantation, small scale plantation, smallholders, so that they have money to buy their baja, buy their machinery, and buy their maybe food for them to eat, so that they can do their work in the planting of the crops, so that they can have yields. So these are the three types of system of banks which is under Bank Negara control, and they all follow Bank Negara rules on the rates, the interest rates. So the rates, in fact, I have grouped under here, likely the related ones to real estate is the OPR, the overnight policy rate. Now they have introduced a new one called standard base rate, which is going to start in 1st of August 2022, so another year interim time. The current on the market rate that they are using is the BR, base rate, and then the earlier years 2015 and above is actually called BLR. So BLR in the sense before 2015, after that it's called BR, and then there is a general term that called oversight policy rate, which is what Bank Negara regulates. Later on we will talk in more detail about how all these interact, what are all these things related to Bank Negara rate. There is a BFR, best financing rate. So this one is actually the equivalent of BLR but for Islamic bank. So in the Islamic bank system, because they cannot have interest, collecting of interest, they call it the financing rate. So the issue of the Islamic way of doing financing, the profit sharing part, which is under the system of the law, the Islamic law. Right, so this part is the usual thing that we hear about when we loan from the government. The other part the government control is how much loan you can get when you buy a property. This one I have spoken before, how government regulate housing loan. So in the earlier years, there is a rule that bank would say that, okay, for all the housing loans, the first and the second residential property, you can loan up to 90%. So in your lifetime, if you buy 3 properties, the third one at that time is only about 70%, and the 4th, the 5th, the 6th all would be less than 70% or 70%, less or equal to 70%, cannot be 90%. The reason is they want the public to have the fund to buy, so they cannot be giving everybody 90%, and the next person come along, the bank has no more fund to give. So there is this regulation that loan to value ratio is decided as 90% for first and second, and the third onwards 70%. But during this time, because of the COVID-19, there were changes in this system of regulating the loan. So now even the third property you can still get at 90%, for the fact that there is too low, the market demand for buying property is bad due to COVID-19 pandemic. So the government encourage public to buy property. So if you have already 2 property at 90% loan, the third property, if you can afford, you can still get 90% loan. So understanding the interest charges in the sense that we have 2 parts, just to recap. One is the rates, the other one is the margin of loan. So the new SBR, which will start in the 1st of August 2022, actually is something we will talk in a bit more detail in the next few slides. So to understand the all the differences in the BR, BLR, and also SPR. We have to understand this part. The lending effective rate, that means when you get a loan, the amount of loan, that means you get a 500,000 loan or 1 million loan. The amount that the rate that charge, lending charging rate, actually depends on many factors. So one of the key factors is actually the government reference rate. That means this is the rate that Bank Negara set. So this is a standard rate that Bank Negara say that all the bank must follow. So this is probably the minimum lending rate. So that means individual bank, when they get a loan to disperse, they will follow the Bank Negara recommended overnight policy rate, and then from there on they put in their profit. They call it spread. So this includes the risk that they're going to take for individual case. So by looking at 500,000 or 1 million, which one has a higher risk? If there is higher risk, then they will have a higher spread because the risk is higher. So if let's say they say that, okay, this guy, he is going to pay a bigger risk, that means they're going to have a bigger risk, but I can loan him more money, being that 500,000 compared to 1 million, so I can loan him more money. Instead of giving loan to 2% at 500,000, I give 1% at 1 million. So should I make a better, because of saving, instead of doing it 2 times, I do it 1 time, so there is a saving of workload done. So there may be some saving. So maybe I will give encouragement that people will take 1 million. So the spread for the 1 million loan would be smaller. Instead of the same amount, they will encourage people to take more. This is like when you buy things, when you buy more, then the benefit of buying more will have a higher discount. So probably buying 2 bg of durian, you get certain discount, but then you buy 20 bg of the durian, then you get even more discount because you are buying more. So this is the way that banks would allocate the spread. So effective lending rate is what you actually pay when you get the loan from the government, from the bank or the government. Government, again, I'm touching on the topic of loan. So if some of the loans is from government, they are government teachers, government staff, then you get loan from the government. Government doesn't follow this particular system. Government has its own way of calculation. So this is the banking loan. That means you get from the bank, right? So this means lending rate equals to the reference rate, which will be, example, the standard best rate or the OPR rate, and then plus the spread. So this is from Bank Negara. Now I would make it more easier to understand that actually the BR and the BLR is a group of all these two together, because the bank doesn't want to tell you how they calculate the spread. That's why the BR and the BLR is actually a sum of all these two. So the sum of all these two, how they calculate inside the bank is their own way. It's a bit like a trade secret. They don't want other bank to know. So that's why when you compare bank A and bank B, the lending rate may be different. One is maybe 3.45, another one 3.6. But when you ask them how do you arrive, then they will say that it is based on my personal way of calculating with the government Bank Negara reference rate plus the expenses plus the profit plus the risk we are taking. But then they won't tell you how they calculate all this. So they would actually say that at the end, my BLR or my BR is 3.6, and then you will get the lending rate at around 3.5. So I give you extra of discount because I think you are a good paymaster. So that is the way that bank people going to tell you So if you later on see the table, you understand more what I mean. So this eventually will actually be replaced by standard BR. So in the earlier on, the BR set by banks, different bank has different BR, as I said just now. Why? Because they don't want to tell you where they calculate. But the future after 1st of August 2022, the Bank Negara's overnight policy rate will be used and to give to all the banks to have a standard BR. So all the banks will have standard BR. So when they give you the effective lending rate, you actually calculate their spread, because that is the differences between banks already. So let's say how this will affect all the loans. Now all the loans that has been given before 2015 still follow the BLR. After 2015 until 2022 August 1st, that means 31st of July is still BR. So from the beginning of the clock, 1st of August 2022, all the bank will have the SBR. So they will have all the SBR, and if you want to use this SBR system, then you have to refinance your BLR and the BR loans. So that part which are affecting the loans, this fixed rate, that means the car loans, SME corporate loan, they are not affected. Only the housing loan, okay, floating rate housing loan, personal loan, which is a floating rate one, these two are affected, but the rest are not affected. So in the sense that if you are worried about whether your car loan would change or not, it will not change, because there is no BLR or BR for car loan and SBR for car loan. So OPR, what it is? Overnight policy rate is an overnight interest rate that applies to money lent between financial institutions. So it is regulated by Bank Negara Malaysia to control the money liquidity in the financial system. So that one I have spoken about in the chart that says that there is a monetary policy and the fiscal policy. So this OPR part is in fact the interest part, how the Bank Negara, the national bank of our country, regulate the cost of fund in the country to make sure that more money is into the money market, or is it less money, or people are putting money, keeping into investment like monetary investment, bonds and all the saving saving account, fixed D and all those things. So BLR, BR and OPR historically, prior, I said prior to 2015 is all BLR, and this BLR depends on the OPR also In the old days it's still OPR, but then the bank will calculate the BLR. Then this how do they calculate derived through a blanket of formula that applies across the board. The BLR was determined after reviewing some of the statutory reserve requirement. Different bank would have to comply with different statutory reserve requirement. Now this one I want to mention a little bit. Some banks because they deal with a lot of customer on a commercial basis, so they need to face with a lot of withdrawal. So people are in business, so they need money in the cash to pay customer or creditors, and also to pay suppliers, so they need the withdrawal. So some banks that deals with commercial things, they have to keep high amount of reserve to allow people to take out money. But some banks, they are not so much on this part. That means they are more to just loan. So they give out loan, but then they don't give loan into businesses. They give loan to buy housing, property and things like that. That people do not need to withdraw a lot of money, but then they keep paying back. The cash paying every month, the installment every month is very regular one, because you cannot default your bank repayment. So every month the money that comes in is cash for the bank. So the bank in such a way indeed have a different profile of cash withdrawal compared to the business type of business loan. So different types of loan, different types of necessity in coping with the cash flow of the bank. There are different statutory reserve requirement. So this means that some bank, their strategy is more to SME, small and medium industry loans. So they need a lot of cash flow for businesses. Whereas for some banks that deal with like agriculture investment, then it will be one lump sum payout, and then every month they receive a payment back. But then there will be no much of a cash flow in between, because the plantation may take a long time to grow and crop. So all these differences in the bank's background and the bank's way of dealing with their cash flow. So when they cope with this cash flow, then they will have to calculate out what are the risks and the amount cash then they need to keep lah. So if they were to keep very much cash then it means that they are higher risk, because there can be higher withdrawal, that they have to let go of some of the investment in order to cope with the cash requirement. So that means some of the long-term investment may not being producing fruits, and they have to let go because to cope with the demand of the public to withdraw money. So these are the reasons behind. So overnight policy rate is the minimum interest rate that banks will give among each other. So this is 1.75. So if you were to imagine 1.75 is very low now because of the pandemic. This is 1.75 has been around for almost 6-7 months already. So when this is low, that means the cost of fund is low. You can borrow money at a low interest rate. So now borrowing money to buy property is indeed good time, because the cost of borrowing, the interest rate is low, so your cost of paying your interest is low. So you can get a high amount of loan and you pay a little bit of interest only. So that means you use this money to buy a property which you appreciate over time, and that appreciation eventually will be capitalized for your retirement fund. So this is a simple way of thinking about how interest rate interact with the decision to investment. We will talk about more on this in the chapter regarding policies, government policy, portfolio management. Hence the OPR, when it is cut, bank will lower their base rate accordingly, because the 1.75 built with the spread. So if they keep the spread, the BLR in total, the effective lending rate in total would decrease when the policy rate decreases.